Sullivan. I'm a former IRS agent and teaching instructor with IRS. Welcome to my tube. I appreciate this. I love doing this. I love to give you the inside information. I worked at IRS a number of years. I have been doing this 51 years, have a whole team of former IRS agents, and I kind of pull the curtain back and let you know what IRS is really doing. A lot of other people share from experience in working cases. We actually know what goes on. We know their internal systems because we used to teach it. We know their management style and negotiation style. Anyway, I've been doing this a really long time. I just want to talk to you today about understanding the IRS financial statement, and when you give that to IRS, how are they going to react and what they're going to do. IRS will ask you for a 433-F. That goes to the service center, a 433A to the RO, or the 433B to the RO. That financial statement is the most important thing. It controls your case. It is the steering wheel, so to speak, of what IRS is going to do with you or to you based on that. So it's important you understand the financial statement and give you some tips in filling it out. I'm not going to give you all the tips because we're really good. We know how to polish those statements. I'm going to give you some basic ideas. That's what we do. That's our intellectual kind of property in our head, what to do with statements. But generally, you have to know two things. IRS is going to look at your asset base. As far as the asset base, what can I tell you? What tips? Make sure you put the lowest legal values you can. Don't use retail values, use wholesale values. Is it okay to take up to 20% off? Yes, that's a wholesale value. So when you're giving those values to IRS is going to look at those as the equity portion to what you have. Remember, IRS can take your pension, your IRA, any 401, 409, 407, whatever the hell you have, IRS can take that, and it's part of your asset base, so know that. The IRS agent is going to look to cash equity, and they're going to look to any equity, in fact, that you have in anything. That's the first part of the equation. The second part of the equation that IRS is going to look very closely at, and you're not going to know nothing about, is the IRS income and expense analysis and why that's so critically important. If IRS needs a payment from you, they're going to look to your spending habits. What most people do not know, they have no clue about, is IRS has this national standard. I think I do a video on this every five times because I keep getting calls because people keep getting nailed with large payment agreements because they don't understand the national standard. IRS has a standard which they're going to take your expenses and throw them out and put theirs in 4 areas. The area is housing and utilities, food and clothing, car payments, and car expenses. IRS is going to limit you to what you can take. Your rent may be $3,000. IRS is only going to give you $1,800. That means you got $1,200 left. You have to be careful, and that's how they nail you. If you don't understand the national standards, don't even bother calling IRS. Hire somebody. Hire us, hire whoever. Now, if you don't have a lot, it's okay. Pick up the phone and call them. If you're broke, to save a lot of people I give advice to, they're on SSI, they're on disability, just call them because you really don't have anything to lose. There's nothing there. However, if you have an asset base and a little heavy on the income, if you call them, you're going to have a really bad hair day, I guarantee it. Mike Sullivan, former IRS agent. Give me a subscription if you would. I really, really appreciate that. I give you the best tips I can. Thank you.